And the chart you're looking at right now is the E-Mini S&P 500. As you recall, yesterday the market hit this high yesterday and started to sell off. Let me just show you exactly what we did. The market opened up higher, traded up to 1648.5, and pretty much traded lower on the day. And the market's going to open up considerably lower today, roughly almost 200 Dow points lower, because the futures, let me just put on a futures chart of the intraday intranight rather, the Globex chart, the night trading. Look at this. The market has traded lower all last night. We've traded lower. Look at this, traded 1626.5 right now, almost 20 full S&P points lower from where it closed. Remember, this is where it closed last night. Okay, it closed right in here, right up in here. We started trading lower right out of the gate last night, right? And then look at the 200, this purple average last night, really contained price well. So we traded down here to this low, rallied up to the 200 exponential, this thick purple line, traded down here, made a new low again, rallied up, okay, between some key moving averages, popping its head up above the 200 just briefly right here, selling off again. And then a hot pink line here is the 50 exponential. And once we made this new low, we rallied up to that 50 exponential. Look at that, and really dropped last night. 530, drop lower. Look at this is where we're at right now, 1627. So essentially, the market's doing pretty much what I thought it would do in terms of, remember in yesterday's video. Let's see, in yesterday's video, I said that the market was trading between the 50 and 60% retracement of this downswing. So again, what we did was we measured from the all-time high in the S&P right here, right, down to this correction low right here, right? Measured that. 38.2 is right here, the 50% retracement, and yesterday opened up higher than Friday and traded real close to that 61.8% retracement, and then turned and traded a little lower. Let's look at yesterday's chart. Okay, yesterday pretty much opened up near its high. Okay, this is where it opened yesterday. Made the high in the first 3 minutes of trading. This is yesterday's high, and immediately the market opened up, made that high, and traded lower to this low. Tried to rally here, right? We tried to rally up. We essentially tried to retest the high of the day. Missed it by 1 full point. 1 point. It came within 1 full point of testing the first 3 minute high, and then failed and closed, in the bottom third of yesterday. So again, today is going to open up significantly lower. Again, I can't predict what the market's going to do. No one can, but my guess is if the market, let's put this, okay, again, this is the intraday chart, last night's trading. Market's right now at 1626.25. So we're going to have a big gap. We're going to have about a 15-point gap lower, okay, which is pretty big. So so the first half hour to 45 minutes says a lot. If the market's really not able to try to fill that gap and it heads lower and takes out that first half hour's low, my guess is we're going to go a lot lower today. But it all is dependent upon the first half hour to 45 minutes of trading. I mean, it very well could open up lower and rally right out of the gate for the first half hour to 45 minutes. If we do that, we would look for some resistance. I'll be back with you tomorrow morning to tell you exactly how today would have been played. Since I'm not making a video live as it opens, market's going to open up here in 14 minutes. Let's go back to our regular charts here. And I want to show you the TBT. All right, TBT, this is the daily chart. This is the interest rate play that I've been talking about for quite a while. If you recall, yesterday opened up higher, right? Now this high here was the highest high in the last year, okay? And we barely penetrated through it last week, right? And we traded down off it. And I told you that what the play was, measuring from this low to this high, This is the 38.2 of that run up, right? Of this run up. That's the 38.2 and the 50%. Look at the market nailed the 38.2 right there, which also happens to be right smack dab between the mid to the lower band, which was a nice buy. But I also told you that if the market would come up through the high, I would add to that position a little bit, which I did yesterday morning. Right now, the market's trading at 70.19, so it's trading about yesterday's high. So it's going to open up a bit higher today. So it'll be real interesting to see if the market can close above this high, the yearly high, which is 69.64. 69.64. Let's put this in a little bit and just look at the overall. Obviously, again, this is the interest rate play, right? So when 30-year bonds go down, interest rates go up, right? No, when 30-year bonds go up, interest rates are at the lowest level. So this is the inverse, right? So if you think interest rates are going to move up, okay, this is the market to take advantage of, to buy the TBT. Okay, so I am long this market, and I showed you what I'm looking for on the E-Minis. I'm looking for the market to potentially push a lot lower. But again, just because the market's opening up lower today doesn't necessarily mean that the market is going to continue lower today, okay? The big thing to, here, let me just try. Okay, the big thing to focus in on is that first half hour to 45 minutes, okay? We already know that the market's going to open up substantially lower, about 15 to 20 points lower. That's a big gap. Again, pay attention to the first half hour to 45 minutes of trading. If we continue moving lower in that half hour to 45 minutes without any real rally up off that low, attempting to fill that gap, we're going to go a lot lower. But if the market's able to find the bottom here in the first half hour to 40 minutes and it's not able to push lower, but yet takes out the high of that first half hour, I would expect the market to move up. So it's really important just to sit tight and watch and observe that first half hour, okay? Hope that helps. Have a great day. Be profitable. And just one more thing. I know I'm long-winded. I like to talk a lot, but I'm sorry. Gold, I'm just glad I got out of that trade because it's going to open up lower. It's going to open up about 130. Gold, GLD, the ETF of gold, is going to open up at 132.31, so down in here. I'm keeping this on my watch list because I like the pattern down here, right? We've got a potential double bottom, and as you recall, I took advantage of that. I bought it in here, got a little pop. We took a little profit off and then broke even on the rest. So I'm keeping this on my radar. Okay, the market just opened up. So I'm going to keep this on my radar, and if something sets up, I'm certainly going to try to buy this again. So gold opened up at 132.31. Let's take a quick look at the S&Ps. Here we go. The S&Ps opened up at 1626 and a quarter. Okay, so we're trading down at 1626. We traded down at 1625 and a half. So we are lower here by quite a distance here. Let's see. It closed at 1642 and a half and opened up at 1627. So a good 15 points lower. We're pushing lower now at 1625. So again, the first half hour to 45 minutes is very crucial. Very crucial. So you want to pay attention to that. Okay? Have a profitable day. Bye for now.